Good evening, guys. It is Wednesday, May 21st, 2025. This Bathrobe business. I'm Georgi Oganoff. I got what's left of my decaf coffee, and I've got the news. So today's going to be the last video I do for probably a little close to 2 weeks. The reason being is I'm getting married next week. And so next week's going to be very busy. I've got family coming into town. I got my fiance's family coming into town. I've got a million things to still get ready for the wedding. So I will not have a video. At the same time, this is usually a Monday through Thursday channel, but tomorrow I have an event. I'm going to a gala. So I don't know what that means, but I get to put on my fancy shoes. So I'm going to that, so there won't be a video tomorrow. So I won't see you guys until probably the 3rd of June or something like that. So I know you're going to miss me. I know markets are going to collapse and the entire financial market is going to come to a standstill because I'm not reporting on it. But you'll just have to put up with it. I'm sorry. That's just how it is. I have to. I have to halt the global economy because I have to get married. So I'm sorry. So I hope you enjoyed today's video. Today's video is going to be pretty short and sweet. There were only a few stories that I felt were worth talking about. Everything else I thought was mostly chatter. So one of the headline stories of the day was the stock market finally reacted to the issue happening with bonds. So bonds finally are feeling the repercussions of the downgrade. But the 10-year bond yield crossed 4.5 for the first time in a while, and stocks reacted very negatively. I believe the Dow was down as much as 800 points at one point today. I don't know where it closed at the end of the day, but it was a tumultuous day for sure. It's a little weird that it's taken so long for it to kind of resonate within the market, seeing as this downgrade, I believe, happened on Friday. And the repercussions should have been on Friday. They should have been yesterday, but only today did they finally hit. There's even already talk that major corporations are looking to, as they sell, the narrative is sell U.S. And get out. So, for example, let's share this story from CNBC. This one is reporting that Bank of America is heralding the emerging markets as the next bull market. Dented confidence in the U.S. asset has fueled the business of emerging markets. Analysts say the recent events have reinforced the need for more diverse geopolitical exposure. They use this term of the sell U.S. narrative gained fresh momentum following Moody's recent downgrade of the U.S. credit rating. So in other words, they're looking at other countries, emerging markets, South America, Africa, and looking at those as potential better markets than the United States. Now, I think this is a bit of an overreaction. It's a bit of a course correction. It's not the first time it happened. I remember I'm old enough to remember the financial crisis of 2008, which is almost 20 years ago now. That's kind of crazy because I remember being in college. What was it, 2008? I was a junior in college. And so it's been almost 20 years since then. And it's kind of crazy when you consider that the previous major financial crisis in the 1980s was 20 years before that. And it seemed so distant to me when I was in college. But now here I am almost 20 years later. And it's just the 2008 crisis just seems so recent. But during that time, during that crisis, Brazil was all the rage. South America was all the rage. And once again, this article is literally talking about those same countries once again. I think it's just kind of a reactionary move. You kind of have to consider like, okay, I'm not saying there aren't opportunities for good purchases and good assets to be good profit to be made in those countries. It's just that this feels very reactionary to me. It seems like the same old story being played out. As I kind of highlighted on my channel the other day, even though it's never a good deal when your credit score gets downgraded, in the sense of U.S. exports, it isn't the worst thing in the world. A weaker dollar and a bigger yield on bonds does yield more trade and does yield more short-term gains in the fact that the government is going to be able to print essentially more money because they're offering higher yields. So it's not necessarily bad in the current environment, but in the long term it is. So short-term gain, long-term loss. So this to me seems very reactionary. I don't take it very seriously, but it is something to consider that if money does start pulling out of the United States, it will have negative effects on the U.S. economy, specifically since AI is gobbling up so much of it. every single day. Just yesterday, I didn't even talk about this, but Tesla announced that they're going to continue to keep buying NVIDIA chips and processors as they're building out their AI infrastructure. This is definitely going to be dented if a lot of that income doesn't stay domestic and goes international, especially when you consider the changes we've had demographically with a lot of boomers retiring. This is a theory that Peter Zion has been a proponent of, that as boomers retire, they leave kind of your riskier assets in the stock market and move into something more secure like bonds and annuities. And if that happens, it causes a major depletion in the markets and less development actually happens. Now, that's just a theory. We haven't seen that yet, but any day could be the day. Now, one interesting story that kind of counteracts the leave the U.S. Selling narrative is a CSX CEO was on Mad Money, and he talked about how much the railroad industry is expanding just this year. Now, there's not much to this interview. He's pretty much just talking about how great it's been, how there's more factories opening up in the United States, that they've expanded 37 new. For those that don't know, CSX is a railroad company. They're one of the major railroad companies in the United States. They move product. Pardon me. They move product all across the country. They're heavily based on the East Coast, but we get them out here in the West Coast as well. So they're saying that just this year, there's 37 new plants that have come online. At the end of last year, they were looking at 500 new projects, and this year they're looking at adding another 100 before the end of the year. So they're seeing major expansion with domestic manufacturing. Now, I find this a little hard to believe, seeing as how we haven't had enough time elapse for this. But when the CEO of a major railroad company is talking about growth in these areas, I mean, obviously he's trying to defend stock, but I would say there is a little bit of credit where credit is due, that maybe there is more domestic manufacturing happening than we think or that we see, especially when you're dealing with railroad manufacturing and freight. It might be more industrial products than we once considered. Obviously, this is one of those stories that time will tell, but this is a bit of a light at the end of the tunnel, that maybe there is some kind of development happening in the United States with growth in domestic manufacturing. Okay, last story. So this one is more of the moral of the story kind of story. I know that sounds redundant, but the moral of the story kind of lesson today is in regards to OpenAI and their new chief designer. That's not what they're calling him, but I guess that's the label I'll give him. So let's just jump into this story. So OpenAI made a deal with Johnny. I think it's Ivy. I don't think it's Ive. I think it's Johnny Ivy, because I know I've heard his name before. He was for the longest time one of Apple's chief product designers. So he was one of the chief designers of the iPhone. He was I think multiple iterations of the iPhone, because I think he left the company in 2019. So he had his hands on pretty much every single iPhone that was ever developed up until the 2020 mark. He helped develop the design of the Apple Watch, etc. I don't know if he was there. None of the articles could I find if he helped develop like the iPad or any of the other products or any of the Mac computers. But I believe with the iPhone, he does have credit, and with the iWatch, he does. So 2019, he left the company, created a startup, and now OpenAI is has essentially bought out his startup in order to build a new series of smart AI devices, kind of your Alexas, your at-home appliances that could be better integrated with AI, and they're looking for him to build a smart personal assistant. Now, at first glance, this seems very smart. Why wouldn't you get Apple's chief designer to help design your product that would integrate AI effectively? Because it hasn't been done. If you remember a few years ago, when the whole craze with AI started, I talked about on this channel how I think the real turning point is when they're going to integrate it with smart assistants and home devices. We've pretty much gotten there, and yet it doesn't seem to be the effect that I thought it would be. I think a lot of people were, myself included, picturing a device like Jarvis from Iron Man, where you're just going to be conversing with them and they'll be solving all your problems. That hasn't really happened, and that's not really how we converse with AI. A lot of AI's purposes seem to be geared more towards communication through a PC, even more so than in mobile devices, in order to accomplish specific tasks or jobs. It doesn't seem to be oriented in any way that it would be integrated into our lives from a leisure standpoint. So what I mean by that is, even though there are some apps, including Google, that are launching AI shopping assistants, and I've talked about that on this channel as well, it hasn't really penetrated the market. When it comes to movie selections, it hasn't really penetrated the market. There's no way you could sit on an AI smart assistant and scroll through TikToks the way you can on your phone. In a lot of ways, these AI products haven't really integrated into our life of leisure, but they've done fairly well at integrating into a life of the professional worker. They help compose cover letters, they'll help produce narratives, they'll help produce, be a better search engine. So they've done that, but they haven't integrated directly into consumer products. At first glance, this is what it's supposed to be. Now, there have been a few products that have attempted this, and it even talks about it in this article. This AI pin, I remember, came out a couple of years ago, made zero waves. This company was actually later bought out by HP, having sold pretty much zero product. There was the Rabbit R1, which was just a disaster. It was like the Fire Festival of AI devices. There's these stupid Ray-Ban glasses that Meta keeps pushing. I remember Snapchat had some sort of glasses as well. There's all these different products that a lot of developers are creating, and none of them seem to be penetrating the market very well. They can't seem to find a product that integrates AI better. So it makes perfect sense to bring in this individual to do it. However, I think this is kind of bullshit. I don't think this is going to yield what OpenAI thinks it will. This is kind of the story of the day, the moral lesson for all business owners. While past success is a good indicator of future success, there is a has-been effect when it comes to business. And just because you built one good thing doesn't mean you will be able to replicate it again in the future. Why I'm fairly confident that this doesn't work, this is similar to kind of the lesson I gave you guys with the Starbucks CEO. Well, why I think this isn't going to work is it just took me 2 seconds to Google of what has Johnny Ive been doing since he left Apple. Well, not too much. He has two companies that he founded, one of which was just bought out. It was IO. So I started Googling IO, Johnny IO, Johnny IO website, Johnny IO products, and very quickly you discover that he hasn't developed anything. In the last 6 years now, since he left Apple, let me blow this up, and I'll just read this verbatim. Johnny Ive's Ivy's design firm Love From and its official website lovefrom.com. Additionally, there is an AI-focused startup IO, which Johnny Ive co-founded and was acquired by OpenAI. There is no official website for the IO at this time. So after 6 years, the company that's being bought out doesn't actually manufacture a product. They're just buying this guy out with hopes that he's going to help design them something. But to me, it seems like this is a guy whose best days are behind him. I'm not saying that he can't develop something, but I think the trailblazing days of this individual are over. I think OpenAI is trying to buy their way into a new product rather than actually going in and delving in and developing a new product. I would say it would be better to hire, like 100 designers, to like monkeys in a room with typewriters, to produce dozens and dozens of different products with a much smaller price tag than to hire a guy who just doesn't seem to have it in him anymore to create new and innovative products. I also think that a lot of his success probably has to do with the oversight of Steve Jobs himself. So that's kind of your lesson of the day. While good talent is worth money, don't overpay for talent that expired a few seasons ago. So that's pretty much it. Those are the stories of the day. That's my opinions. Hope you guys enjoyed today's video. I'll see you guys back here in a couple of weeks. So next time you see me, I'll be a married man. So I'll see you guys later. Bye.